I'm going to break down in simple form what I did that gave me 45 pips in this trade and what were my thoughts before taking the trade and how did I manage the trade. Now, before I continue, let me show you the setup I sent to the free Telegram group for the community guys to see how I took the trade and why I took the trade. Here is a chart I sent to the community and I gave them this setup. I told them that we are going to be selling from this level and price did as we predicted. Here was the entry and this is when the price is about to enter my TP. So the first thing you're supposed to do in the market when you plan to trade is to determine the market context. And this simply means the direction of the market. This is usually done on the higher time frame. And for me, I consider the monthly, the weekly, the daily, and the 4 hours time frame. And you can also use the time frame alignment to determine the context. So under this context, I look out for what we call daily bias. Daily bias. Now, before daily bias, you have to consider the weekly time frame. And the weekly time frame gives you the direction of the price on the weekly time frame. And I personally use internal range liquidity to external range liquidity. That is internal range liquidity in form of fair value gap, while external range liquidity in form of all highs and all low. Then for the daily bias, I consider the previous day high and previous day low. That is where there are areas of liquidity and what price has done previously on the daily candle. As the daily candle close above the previous daily candle is the daily candle, that is the current daily candle sweep liquidity above or below the previous candle. These are things that I consider when determining the market context. So in essence, I look for weekly internal to external range liquidity or external range liquidity to internal range liquidity. Then I also consider the daily bias. And for the 4 hours time frame, I consider market structure to see where is the direction of the market. And after looking at the market structure, I also look out for premium and discount. So this is what I do to determine the market context. Let's look at this on the chart and how to determine that. So let's go to the monthly time frame to see what the monthly time frame is doing. Here is the monthly time frame, and we don't have a lot of details on the monthly time frame, but we see price of sweep liquidity above the previous month high, and we see some level of rejection on the monthly time frame. But if we are to consider this fair value gap, then this will be our internal range liquidity on the monthly, but this is too far from the point where price is. So considering that we don't have much details, let's go to the weekly time frame. So on the weekly time frame on Euro USD, we have some level of detail, but let's see what price has done previously. That is where price is coming from. And we say that we're going to look at internal to external range liquidity and external range liquidity to internal range liquidity. But before that, I want to draw your attention to this. We see some level of rejection at this level. And where are we rejecting? If we look at price from the left side, we see that we have an imbalance here and price is rejecting from this imbalance. Oh yes. Now we see the wick has done the damage, but the body is respecting the imbalance. So we see some level of rejection from this level, and we're expecting price to come into the internal range liquidity. So here is the last week candle where I took that trade. And before this candlestick appear, we had this fair value gap. And there is a level of rejection. And with this fair value gap, that means we're expecting price to come into the internal range liquidity. So we now see that this has become the draw of liquidity, this internal range liquidity. So as soon as the new week appeared, I had this in mind because we see this rejection, and this week candle will be the internal range liquidity, and we see price coming into the internal range liquidity. So we are going to skip the daily time frame for now and look at the 4 hours time frame, because like I said, using time frame alignment, we're going to look at the direction of where the price will go. That is the weekly time frame, and we see that we have the bearish movement in mind because we're expecting price to come into this internal range liquidity. So on the 4 hours time frame, we're going to look at the market structure. This is where we entered our trade on 4 hours time frame, but before then we are expecting price to come into the internal range liquidity, which is this fair value gap, and we are going to be looking for market structure shift. And here we have one. We see price create a market structure shift, bearish, and we see another one here again, price creating lower low. Another one here, we see price shows that we are bearish because we see price disrespecting bullish PDRAs and respecting bearish PDRAs in form of fair value gaps and order block. Still on the 4 hours time frame, we can determine our premium and discount. Here we see as soon as price took out this low here, let me mark it. We see that as soon as we see price taking out this low, price went back into the internal range liquidity, and we have our fair value gap here, and we see price respecting it. Now price came back to the level and sweep liquidity below here, which is external range liquidity, and price went back into internal range liquidity at premium level, because if you put a Fibonacci from this high to this low, you will see that price is at what? At premium level. So this brought us to the trade setup, but before we look at the trade setup, we have to look at the daily candlestick, what the daily candle tend to give us in the market. And for us to do that, we have to analyze the daily time frame. So the trade was took on the 9th and 10th. So, but basically it was on the 10th that I placed a trade. But before then, let's look at the previous candle. That is the previous daily candle, and we see high of this candle and the low of the same candle wasn't taken by this candlestick. Now on the 10th, after this candle appeared not to take buy side or sell side, and I said, okay, if we are bearish, I want to see previous day high being taken, and then price entered into the previous day high. But when price was entering into the previous day high, at this level, there is a what? There is an institutional reference point here, which is the consequent encroachment of the wick. If you put this on the wick and then insert the midpoint of this particular rectangle box, let's put the midpoint, we see that this is the consequent encroachment, and we have a level there. So if you go to the 1 hour time frame, you will see the level. So having this, I move to the 1 hour time frame, and on the 1 hour time frame, I have this level here. Aside from this midpoint of the week or the daily, if you look at on the 1 hour time frame, I would like to remove this also. At this level, we know that we have this buy side liquidity, but before this buy side liquidity, we see price coming into this bearish order block, and not just a bearish order block, we also have a fair value gap at the level. So you see we have a fair value gap and price entered it. Now, when price entered into the level, we have this also as change in the state of delivery. Yes, this is our change in the state of delivery. And we have balanced price range at this level because we have a fair value gap on the left and a fair value gap on the right. So this was the balanced price range. However, we also have our bearish breaker block. So we have a lot of confluence, and on seeing this, we see price creating a consolidation here. When price came here and shipped liquidity below this low, remember this was the day low that we said, okay, price has not taken out this and has not taken out this low. So we see price have shipped liquidity also below this low. So now we have a range that is from this high to this low, and we see price going back into the range, which is at premium level, because if you put your Fibonacci retracement, you will see that price is at premium level, which is above 50%. So it's a good level for us to sell. So on seeing this, this happens prior to the day of my trade, but I did not participate in this bullish price. But I told the group member that this is going to be a buy trade, but I'm not interested in buying the retracement. I'm interested in selling because our narrative is bearish. So the next day, which is the day I took the trade, I had this. When price entered this happened overnight, and in the morning during London session, we have this mitigation block. Yes, there is a mitigation block here, and this gave us an SMT with GU here. So as soon as price closed below this, I know that my entry is around this level, and I place my trade right from that level, from the mitigation block, target this low, while my stop loss is above this high. And this is how I got my 45 to 50 pips that very day. So guys, this is how to get a high probability trade, and this is how to take the best trade you ever need.